Good morning. We will pay attention to partnerships today, and we will record the transactions in the general journal. At the end of the year, after the profit was calculated in the profit and loss account, this profit must be distributed between the members. So they are entitled to interest on capital, to a salary, and to bonus. So first of all, we will record the adjustments for these entries to indicate that there's expenses that must be paid by the business and that the money is outstanding and must still be paid to the partners. So the current accounts of the partners will be credited. When we still have to pay expenses, for instance rent, we will take it to accrued expense. But any expenses that's payable to the partners will be transferred to the current account. So in the adjustments, we will debit the expense accounts, and expenses increase on the debit side, and we will credit the current accounts to show the amounts that's outstanding that must be paid to the partners. The current account is an equity account, and equity increases on the credit side, indicating that the money that belongs to the partners in the business increased with these amounts. After we completed the adjustments, we will do closing transfers. So we will transfer the profit from the profit and loss to the appropriation account. Then this profit must be distributed between the partners. So all the expense accounts that we created when we did the adjustments will be transferred to the appropriation account, so that all the nominal accounts are closed off. We will take the profit minus the total expenses that must be paid to the partners to show that there's an additional 36,400 that can be distributed between the partners in their profit sharing ratio. In this case, the profit sharing ratio is the capital balances at the end of the year, and we will show that each one of them are entitled to this additional distribution that will increase the amount outstanding in the current account. All these amounts on the credit side of the current amount will indicate the total amount that is outstanding and payable to the partners. But they already took money during the year, so we will credit the drawings account and decrease the current accounts on the debit side. The balance in the current accounts after the drawings were transferred will indicate the amount that's outstanding. If the balance is brought down on the credit side, it means the partner didn't take all the money he's entitled to and the business owes money to him. If the balance is brought down on the debit side, the partner took more money than he was entitled to and he actually owes money to the partnership.